What's up, people? You're tuned in to Keeping It Real Estate on the Find My Way Home Network. I'm your host, same guy as the last two, the real estate coach with my motley real estate wrecking crew led by the Dean of Home Ownership University, Scott Shang. How you doing, Scott?
I'm out of things to say.
I know, because you said them in every other take we've had.
Yeah. Hi, everybody.
Oh, the one and only Big Bank Frank Caceres of buyingandselling.la.com. What's up, Frank?
How you doing?
I'm doing great. I've been having a good time so far this morning.
We have a lot less energy than the first two takes.
Did you notice that?
Yeah.
Take one, we were fired up and rolling. All right, let's get some energy back. Woo! We're going to start off with Mortgage Basics, brought to us by our friends at Broadview Mortgage. And by the way, they're our really close friends now, serving Southern California home buyers since 1988.
Open the door and you're like right there.
They're right there.
We're having our 25th anniversary celebration tonight.
Really?
Actually, 25 years in the mortgage industry. That's crazy, right?
That's insane.
Yeah.
And by the way, you can reach them by calling 714-660-2013. Let's get into the Mortgage Basics,
driving down here and joining us in the studio.
Yeah, you could. Come on by. Actually, I really like this location.
Open bar?
No, that's not an open bar, Frank. Get that out of your mind, will you please?
Waterboard.
Mortgage Basics. Here we go. Topic. When is HARP 3 going to be available? Would you like to give us some background
How did I know
first?
you were going to ask that?
I don't know. Want to give us a little background? On maybe HARP 2?
Let's do it.
Okay. Totally.
Okay, so
energy,
Okay.
Scott. Energy.
So HARP 2 is the Home Affordable Refinance Program.
I've heard that.
I'm not making this any easier. All right, I've got to get into mode here.
You can do it.
So Home Affordable Refinance Program, it was actually just extended. It's curious that they just extended it because it seemed like it was extending it. They extended it at a time when it seems like almost everybody who's taken advantage of it that qualifies has already taken advantage of it. Basically what it is if your loan is owned by Fannie Mae or Freddie Mac and you owe more than what your home is worth and you're making your payments on time, you can refinance to take advantage of today's rates. And the sort of the purpose of the program was to go from a 6 or 5% interest rate, go down to a 3-ish% interest rate, but continue to make the same payments as you were making, so you can accelerate your equity, your equity growth by continuing to make your payments, and so that you can get above water faster than if you were locked into these higher interest rates. So the problem with this program is it's only loans that are owned by Fannie Mae and Freddie Mac.
Which is how many? What percentage of the loans?
Oh, man.
Basic. I'm not
I don't know.
Give me a guess.
I couldn't even guess.
Well, 80% of statistics are made up anyway, so...
Yeah, but I'm not going to make this one up. I'll figure it out and I'll write it on the blog post under the video.
Okay, good.
Okay, because it might be important. But in the past 5 or 6 years, back when things were really crazy and we had all those toxic mortgages, the loans that went to Fannie and Freddie were not the most popular loans. It was the alternate, Alt-A is what they called them. So people with good credit, but they were self-employed, so it was like stated income and things like that. And then we know of some of the programs that got abused, negative amortization, all that. So those loans were not owned by Fannie Mae or Freddie Mac, and that's what HARP 3 addresses. HARP 3 was a proposal to allow responsible homeowners that are making their payments on time, they have good credit, they owe more than what their home is worth, giving them the same opportunity as people whose loans are owned by Fannie Mae, allow them to refinance at lower rates. That's the HARP 3 proposal. They've been trying to push it through Congress. They attempted before the elections. I think it got killed before the elections because of political, battle. Nobody wanted to come in and be the hero and allow everybody to refinance. But I'll tell you what, I'm not even sure that it's going to come back now. And this is kind of where I'm thinking, just because property values are increasing so much.
Yeah, there's a lot less people underwater.
Right. I thought I saw a statistic in the in the Orange County Register, and this one I'm not exactly making
850,000 less people underwater since the first of the year.
Is that what it is?
Mm-hmm.
850,000?
Yep.
In Orange County?
Nope.
Or in California?
California.
Yeah. Right. So I'm I don't know if they're going to push these out anymore. So this might be as good as it gets. So the good news is that we've got these programs, and see, you can refinance almost up to as much as you owe. If you owe almost as much as what your home is worth, there's programs available to you. And there's great programs available. Even though the interest rates are rising, there's still some really low interest rates, and you almost only have to wait another month or two. So, HARP 3, I don't know if we're going to see it. I mean, I think it's been tabled for so long, and they've been talking about it for so long. If values continue to increase the way that they are, I think you just need to.
So have the anticipated increase in values been? Is that what has been the holdup then for release of the program? Or?
No. I think the release of the program is who's going to absorb those mortgages. So FHA has been aggressively trying to get out of the mortgage industry. Right. They made mortgage insurance permanent. They raised mortgage insurance for like the 6th time in 5 years, just this couple months ago. They're making it really, really expensive. Initially, I thought that it was a money grab by FHA because they've been talking about the bailouts and everything, that FHA needing a bailout because of the high number of defaults. To refinance all of those non-Fannie Freddie loans into FHA mortgages at permanent mortgage insurance and high mortgage insurance rates, that's a great moneymaker for the government. And initially, that's where I thought they were going. But now all the talk is, and the behavior, if you read the behavior of FHA, they're trying their hardest to get out of the mortgage business, right?
Okay, so before we get into a couple of mailbag questions, the basic of today's topic is HARP 3 probably won't show up.
I don't know. I think that we're going to, and this is purely just a prediction. It's not based on anything other than 850,000 people are no longer underwater. So why do they have to have a special government program? I'm hoping that somebody comes to their senses and the government stops intervening, and maybe we have a little bit of natural growth or recovery that comes back to the market.
Well, because although 850,000 people may not be underwater, there are still a lot of high unemployment, or only temporary or part-time employment, and people still
underemployed.
Actually, it's funny because a lot of this is in our theme of our show today. It just seems like currently in the way the real estate market has a lot of this of what we're talking about in it. So let's get into. Did you want to close out the segment, Scott, before we get into mailbag?
I think.
Was that a closeout? I think
was that a closeout?
It felt pretty good.
I'm feeling
closure. Yeah, okay, closure.
Closed.
Are we recording? That's the real important question.
Yes,
I see numbers.
We are recording. I've got red, I've got purple, I've got colors, I've got a rainbow going on over here.
Yeah. So the bottom line is we may not need, and we may not see, and we may not need any more special underwater refinance programs if the equities continue to increase at the pace that they have been, especially this year.
All right.